I'm about to show you 3 stocks trading at their lowest prices this year. Imagine buying into a leader in beverages, a retail pioneer, and a tech financing giant, all at a discount. These companies are on sale, and this might be the biggest buying opportunity of the year. We're diving into the numbers, strategy, and potential behind each stock. One is a household name, another dominates a new industry, and the third funds future tech. They're all at a 52-week low, like finding a Lamborghini on clearance. Are they a trap or a treasure? Let's find out together. Hit the like button, let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Ready to see these stocks? Let's go. Let's kick things off with a company that's quietly dominated the beverage world for decades. Constellation Brands, ticker symbol STZ. While it might not be a household name like Coca-Cola or Pepsi, Constellation is a true titan in the industry, with a reach that extends across continents and a portfolio that touches nearly every corner of the alcoholic beverage market. Founded in 1945, this company has grown from a small wine producer in upstate New York to a global powerhouse, shaping the way millions of people celebrate, relax, and connect. You might not realize it, but Constellation owns some of the most iconic and best-selling beer brands on the planet. We're talking about Corona, Modelo, and Pacifico, names that have become synonymous with good times, summer barbecues, and celebrations around the world. Corona, with its signature lime wedge, is a staple at beaches and parties, while Modelo has surged in popularity, especially in the US, becoming a go-to choice for beer lovers everywhere. But beer is just the beginning. Constellation Brands boasts a massive and diverse portfolio of wine and spirits as well. From the prestigious Robert Mondavi wines, which have earned international acclaim, to the bold and youthful Svedka vodka, their offerings cater to every taste and occasion. Whether it's a fine wine for a dinner party or a vodka for a night out, Constellation has a product on the shelf. Their reach doesn't stop at just a few brands. Constellation has strategically acquired and developed dozens of labels, ensuring they have a presence in every major beverage category. This broad portfolio not only diversifies their revenue streams, but also insulates them from changing consumer preferences. If beer sales slow, wine or spirits can pick up the slack, making Constellation a resilient player in a notoriously competitive industry. What's more, these are products that people continue to buy regardless of economic ups and downs. Alcoholic beverages are often considered recession-resistant. People might cut back on luxuries, but they still enjoy a drink to unwind or celebrate. This gives Constellation a level of stability that's rare in the consumer goods sector, making it an attractive option for long-term investors seeking steady returns. So with all these strengths, why is Constellation stock trading near its 52-week low? The answer lies in the challenges facing the entire industry. Rising costs for raw materials like aluminum, essential for cans, and increased shipping expenses have put pressure on profit margins. These are global issues, affecting companies everywhere. But they've hit beverage makers especially hard due to the sheer volume of packaging and logistics involved. On top of that, there are concerns about consumer spending as inflation eats into household budgets. Investors are also wary of Constellation's significant investment in Canopy Growth, a major player in the cannabis industry. While this move was seen as forward-thinking when cannabis legalization seemed imminent, the slower-than-expected rollout of legal markets has made some shareholders nervous, adding further pressure to the stock price. The market's reaction has been swift and, some would argue, overly pessimistic. Short-term headwinds have overshadowed the company's long-term strengths, leading many investors to overlook the underlying value and potential for future growth. Yet despite these challenges, Constellation's core beer business is absolutely thriving. Modelo Especial in particular has taken the US market by storm, recently surpassing Bud Light to become the top-selling beer in America. This is no small feat, it's a testament to the brand's appeal and the company's marketing prowess. With more consumers reaching for Modelo, Constellation is capturing market share and driving impressive sales growth. But here's the thing. The market seems to be ignoring these positive developments. Instead, it's fixated on temporary setbacks, overlooking the enduring strength of Constellation's brands. These are names that have stood the test of time, weathered economic storms, and continued to grow even when the broader market stumbles. And let's not forget the international growth story. Corona and Modelo aren't just American favorites. They're gaining traction in markets around the world. As global tastes evolve and emerging economies develop a thirst for premium beverages, Constellation is perfectly positioned to capitalize. The potential for expansion into new regions is enormous, offering a powerful engine for future revenue growth. The company's investment in Canopy Growth, while controversial, could still pay off in a big way. If cannabis legalization continues to advance in the US and abroad, Constellation stands to benefit from being an early mover in the space. The potential for cannabis-infused beverages and other products is huge, and Constellation's expertise in branding and distribution could give it a major edge. Meanwhile, management is signaling confidence in the company's future by buying back shares. This not only supports the stock price but also indicates that leadership believes the market is undervaluing the business. Share buybacks can be a powerful tool for creating shareholder value, especially when a company's fundamentals remain strong. And let's not overlook the dividend. Constellation pays out regular dividends, providing investors with a steady stream of income while they wait for the stock to recover. In a volatile market, that kind of reliability is invaluable, offering both peace of mind and tangible returns. Recent earnings reports have actually beaten Wall Street's expectations, demonstrating the company's resilience in the face of inflation and supply chain disruptions. This kind of performance is a clear sign that Constellation isn't just surviving, it's thriving, even when conditions are tough. While the market remains focused on past challenges, the future for Constellation Brands looks incredibly promising. With a strong lineup of beloved products, a growing international presence, and smart investments in emerging industries, the company is well positioned for long-term success. For investors, this could be a rare opportunity to buy into a market leader at a significant discount. As more people around the world discover and enjoy Constellation's brands, the stock is likely to rebound, and those who get in now could see substantial gains as the company's growth story continues to unfold. In the end, this is a classic case of being greedy when others are fearful. Constellation Brands is a market leader with a proven track record, a diverse and resilient portfolio, and a bright future ahead. Sometimes the best opportunities are hiding in plain sight, just waiting for savvy investors to take notice. Next, we dive into the explosive cannabis industry with High Tide, ticker HITI. The cannabis sector has been one of the most talked about markets in recent years, with waves of legalization and shifting public opinion creating both massive hype and significant volatility. But beneath the surface, there are companies quietly building real businesses, and High Tide is one of the most intriguing players in this space. High Tide is building the largest cannabis discount club, like Costco for cannabis. Imagine walking into a store where cannabis products are not only affordable, but the entire experience is designed to reward loyal customers and keep them coming back. This is a unique approach in an industry where most competitors are still focused on cultivation or premium branding, rather than the everyday consumer. Their Cabana Club membership program creates brand loyalty and recurring revenue. With over 1.1 million members and growing, this program is a game changer. Members get access to exclusive deals, special events, and personalized offers, which not only drives repeat business, but also gives High Tide valuable data on customer preferences and buying habits. This data-driven approach allows them to tailor their inventory and marketing, maximizing both customer satisfaction and profitability. While others focus on growing cannabis, High Tide focuses on retail and customer relationships. They understand that the future of cannabis is not just about who can grow the most, but who can build the strongest connection with consumers. Their stores are designed to be welcoming and educational, with knowledgeable staff who help demystify cannabis for new users and provide expert recommendations for experienced customers. The cannabis sector has been crushed, dragging down all stocks, including High Tide. Over the past few years, investor sentiment has soured due to regulatory delays, oversupply, and disappointing earnings from some of the industry's biggest names. As a result, even fundamentally strong companies like High Tide have seen their share prices plummet, creating a disconnect between stock price and business performance. But High Tide is growing revenue and is on a path to profitability. In fact, they've posted record sales quarter after quarter, even as many competitors struggle to stay afloat. Their focus on operational efficiency and disciplined cost management has allowed them to weather the storm and position themselves for long-term success. Analysts are starting to take notice, and some believe that profitability is just around the corner. Their CEO, Raj Grover, is a retail and capital allocation master. With a background in building successful retail businesses, Grover has steered High Tide through turbulent times by making smart acquisitions, negotiating favorable leases, and keeping a laser focus on customer experience. His leadership has been instrumental in transforming High Tide from a small Canadian retailer into a global cannabis powerhouse. High Tide is expanding into the US and Europe, owning popular e-commerce sites. Their international strategy is twofold. First, to establish a strong retail presence in key markets, and second, to leverage their e-commerce expertise to reach customers wherever cannabis is legal. By acquiring leading online platforms for cannabis accessories and CBD products, High Tide is building a global ecosystem that can quickly scale as new markets open up. The market misses their global platform and strategic positioning for US legalization. Many investors are still focused on short-term headwinds, overlooking the fact that High Tide is uniquely positioned to benefit from any positive regulatory changes in the US or Europe. If federal legalization happens in the US, 𝗗𝗘𝗧's infrastructure and experience could allow them to move faster than almost any competitor. They are executing a roll-up strategy, acquiring smaller chains to expand. This approach allows them to quickly increase their footprint, gain market share, and achieve economies of scale. Each acquisition is carefully selected to complement their existing operations, and the integration process is managed with precision to ensure a seamless customer experience. Despite growth, the stock trades for pennies, an insane bargain. 𝗗𝗘𝗧's valuation is a fraction of what you'd expect for a company with their growth trajectory and market position. For value investors, this is a rare opportunity to buy a high-quality business at a deep discount before the rest of the market catches on. The risk is tied to the broader cannabis market, but the potential reward is high. Like any emerging industry, cannabis comes with regulatory uncertainty and market volatility. But for those willing to stomach the ups and downs, the upside could be enormous. 𝗗𝗘𝗧's diversified business model, strong leadership, and global reach make it one of the best-positioned companies to capitalize on the next wave of growth. U.S. legalization could explode their stock price, leveraging their retail expertise. If and when the U.S. opens up, 𝗗𝗘𝗧's experience in running profitable stores and building customer loyalty will give them a huge advantage. Investors who get in early could see massive returns if the company executes on its vision. The management team is heavily invested, aligning interests with shareholders. This isn't just a job for them, they have real skin in the game. Their financial commitment signals confidence in the company's future and ensures that their goals are aligned with those of everyday investors. The market's irrationality is our opportunity to buy a future leader at a low price. Sometimes the best investments are found when others are fearful or distracted by short-term noise. 𝗗𝗘𝗧's fundamentals are strong, and the company is executing on a clear, ambitious strategy. For investors with a higher risk tolerance, 𝗗𝗘𝗧 is a compelling opportunity. If you believe in the long-term potential of the cannabis industry and want exposure to a company that's doing things differently, 𝗗𝗘𝗧 deserves a spot on your watch list. The road ahead may be bumpy, but the potential payoff could be life-changing. In the world of high-stakes finance and cutting-edge innovation, there's a lesser-known player quietly shaping the future. Horizon Technology Finance, ticker symbol HRZN. While most people think of big venture capital firms or Silicon Valley giants when it comes to funding the next wave of technology, Horizon operates behind the scenes, providing a crucial lifeline to startups that are building tomorrow's world. This unique bank isn't just another lender, it's a specialized financial institution with a mission to empower the most promising tech, life sciences, and healthcare companies, helping them scale their ideas into reality. Horizon's core business is providing loans to venture-backed companies in sectors that are driving the future. Think artificial intelligence, biotechnology, medical devices, and digital health. These are companies that have already attracted the attention of top venture capitalists, but need additional capital to accelerate growth, expand operations, or bring breakthrough products to market. By focusing on these high-potential industries, Horizon is at the forefront of technological progress, supporting innovations that could change the way we live, work, and heal. What sets Horizon apart from traditional venture capital is its approach to risk and reward. Instead of taking equity stakes and hoping for a big exit, Horizon offers secured loans, meaning their investments are backed by collateral, such as intellectual property, equipment, or other assets. This structure significantly reduces the risk of loss, even if a startup faces challenges. For entrepreneurs, it's a way to access much-needed funding without giving up ownership or control of their company, while for Horizon, it's a strategy that balances safety with the potential for attractive returns. In today's volatile financial environment, this model has proven especially resilient. While rising interest rates have put pressure on many growth stocks and made borrowing more expensive, Horizon actually benefits from these higher rates. That's because the majority of its loan portfolio is structured with floating interest rates, which means as rates go up, so does Horizon's income from interest payments. This dynamic creates a natural hedge against inflation and market uncertainty, positioning Horizon to thrive even when others struggle. Of course, no investment is without risk. The market has expressed concerns about potential defaults, especially as economic conditions tighten and some startups face headwinds. However, Horizon's management team is highly experienced, with a track record of navigating challenging markets and selecting companies that are not only innovative, but also backed by top-tier venture capitalists. This rigorous selection process helps ensure that Horizon's portfolio remains strong, even in uncertain times. The expertise of Horizon's leadership is a key differentiator. They focus on building relationships with both entrepreneurs and investors, leveraging deep industry knowledge to identify the most promising opportunities. By partnering with companies that have already passed the scrutiny of leading VCs, Horizon adds another layer of due diligence, further reducing risk and increasing the likelihood of success. Another advantage is the structure of Horizon's loan portfolio. With most loans tied to floating rates, the company's income rises as interest rates climb. This means that in an environment where many investors are worried about inflation eroding returns, Horizon is actually positioned to benefit. The result is a steady stream of income that supports both the company's operations and its generous dividend policy. Despite market fears about defaults and economic slowdowns, Horizon's earnings are set to increase. The company's disciplined approach to lending, combined with its focus on high-growth sectors, means it's well-positioned to weather volatility and capitalize on opportunities as they arise. One of the most attractive features for investors is Horizon's massive monthly dividend. Unlike many tech stocks that reinvest profits for growth and pay little or nothing to shareholders, Horizon offers a high yield, distributing a significant portion of its earnings as cash dividends every month. For income-focused investors, this provides a reliable stream of passive income, making Horizon a standout choice in the tech sector. Even more compelling, the stock currently trades at a discount to its net asset value. This means investors are able to buy shares for less than the underlying worth of the company's assets, providing a built-in margin of safety. In a market where many tech stocks are priced for perfection, Horizon offers value and downside protection. For those seeking both income and exposure to the fast-growing world of technology, Horizon is a perfect fit. It combines the stability of a well-managed financial institution with the upside potential of the tech sector, all while delivering consistent cash flow to shareholders. As innovation continues to accelerate and new breakthroughs emerge, Horizon is uniquely positioned to finance the next generation of tech leaders. By supporting companies at the cutting edge of science and technology, Horizon is not just funding businesses, it's helping to shape the future. The current stock price reflects a level of pessimism that seems unwarranted given Horizon's strong fundamentals and growth prospects. For savvy investors, this creates a compelling value opportunity, a chance to buy into a profitable, well-managed company at a discount with the added bonus of a high yield. Horizon stands out as a well-managed, profitable business that's set to thrive in today's environment. Its unique approach to lending, focus on high-growth sectors, and commitment to shareholder returns make it a rare find in the world of finance and technology. With the stock trading near its 52-week low, investors have a rare opportunity to lock in a massive yield and buy at a significant discount. For those looking to combine income, value, and exposure to the future of technology, Horizon Technology Finance is a name worth knowing and watching closely. There you have it. Constellation Brands, High Tide, and Horizon Technology Finance, all at 52-week lows. A beverage giant, a cannabis pioneer, and a tech-focused bank offer unique opportunities. The market is scared, but fortunes are made in these moments. If you're ready to level up your investing skills, check out my Value Stocks Investing Master Course. Learn to spot undervalued companies and build a high-quality portfolio. Click the link in the description to join today. Which stock do you think has the most upside potential? Let me know in the comments. For exclusive tips and analysis, join the Stocks Galore Patreon. If you got value from this video, like, share, and subscribe for more. Thanks for watching.